Good morning. Hello. Welcome. Bienvenue, right? Everything between. We are here for the August 14th, 2024 edition of our pre-market prep session. This is our session where we go over all the important news, ideas, analysis, right? Processing, right? The mental processing, the mindset necessary to make sure that you are on the right side of what's going on with markets. It won't be every time, right? But you want to be aware of the overwhelming probability. You want to be aware of whether or not you should be heavy or you should be light. You want to be aware of all of the different contextual points that make a difference when it comes to trading and navigating markets effectively. And that's what we do here. We focus on getting 1% better, right? It's on the shirt. Eat, sleep, Kaizen, repeat. Kaizen, right? That philosophy of getting just a little bit better each and every day, not being unbeatable, but being unstoppable. Like I posted on Facebook this morning, right, regarding my confessions, there will be days when you thrive and then days when you just survive. But regardless of what happens during those days, you're valuable, right? You're still important. The circumstances and things that happen around you are not indicative as your value as a person, right? Um, Indicative of your value as a person. So all that's important to keep in mind. Your brains are they're wired in a way that are supposed to protect you, but also in a time where we're not really facing the threats the average caveman was facing. Our brains can become, torture chambers of our own devices. So it's important to recognize that no matter what goes on events wise around you, right? Maybe you submitted a proposal at work and it fell through, or maybe there was traffic and your kid had to be there early for, debate club practice and then they were late, right? None of that is indicative of your value as a person, right? Even if you should have woken up earlier, you could have done a little bit better in the proposal, you're still a valuable individual. Right. And you always will be, regardless of what happens, around you. That doesn't determine what goes on inside of you. So that's something it's important to keep close to the heart here on this fine hump day and carry forward as we finish this week, because you might have said, hey, some crap happened this week, Adam, and I'm just, I'm feeling like it's always happening to me. Maybe it's just because I'm not a good person. That's not the case, right? Bad events don't mean anything about the people that are involved in them. So keep your head up, keep working, keep striving, keep grinding, keep growing, and keep executing and getting 1% better daily, which is what we're here to do for this session, what we're here to do each and every day, right? So throw those ones in the chat signifying your intention to get 1% better by the end of this session. And, we can rock and roll from there. Let's see what we got going on here in this fine newsletter. All right. So top news, one hell of a deal. Too much, not yet. Candy giant Mars has inked a $35.9 billion deal for snack maker Kellanova, ticker K, including assumed net leverage in what is set to become one of the biggest M&A headlines of the year. The tie-up will pair the company behind M&M's, Snickers, and Skittles with producers of Pringles, Cheez-It, and Pop-Tarts, meaning the next time you reach for a quick packaged bite, it may ring the register of the same privately held conglomerate. Yeah, a lot of people don't know the big, kind of snack titans that are out there, but the grocery store is pretty much owned by like four or five companies, right? Mondelez, um, Mars, Kellanova, and now you've got Mars and Kellanova coming together. So, snapshot here: Kellanova shares are up on the news. Pre-market climbing 8% above $80. That's near the $83.50 per share level, apparently agreed to by Mars in the all-cash deal, and up from the $60 level since reports of the merger first surfaced in early August. Kellanova was spun off from cereal-focused WK Kellogg, ticker KLG, last year, and has since posted a series of strong earnings, even raising its guidance for fiscal year 24 after its most recent analyst beating results. Not everyone in the packaged food industry has been so lucky. There are fears of slowing growth and a weakening consumer, prompting companies to look for ways to bolster sales and their bottom lines. Some are turning to new markets and innovation, but a merger with a successful company can also do the trick. Diversification for chocolate-heavy Mars is also necessary due to supply risks, especially with cocoa prices hitting record levels this year. If you guys remember that, right? Cocoa was going crazy. It was, a better return on investment, shorter term than gold, than stocks, than Bitcoin. It was cocoa, which was wild. Um, What to watch? The latest deal would be the largest packaged food transaction since the merger between Kraft and H.J. Heinz in 2015. Wow. Heinz used to, I never like, I feel like maybe because 2015, how old was I? I mean, I think graduating high school was I was in college. I thought it had always been Kraft Heinz. That's crazy. I graduated high school 2013. So yeah, I was in college. That's so much more recent than I would have thought. So it hasn't. I mean, the distinguishing factor of Heinz is Heinz, but I feel like in my head I always thought it was Kraft Heinz, but I guess it wasn't until 2015. Crazy stuff. And some are even anticipating a new era of food industry consolidation that has raised the risk of antitrust hurdles with DOJ and FTC under the Biden administration aggressively challenging big mergers and acquisitions. If you guys have tuned in, then my spiel on this. The FTC and the DOJ, all these antitrust entities under the Biden administration have been very, very, very strict. Pretty much any merger or acquisition deal that is reported to go through does not go through. So I think the only way that this works out is if they just time it so that again it doesn't happen under this administration, depending on how the elections go in November. But at this rate, I doubt that it will happen, right? I doubt that it will happen at all under this administration because they have been swatting down deals left and right, and that has been one of the characteristics of the administration as a whole. I think the consolidation is happening just because of logistics, right? The supply chain was all messed up before COVID. COVID absolutely decimated it and is still struggling to get back. And all the events that have happened this year, right, and that are ongoing from past years, like the war in Ukraine and all that, have served to only further deteriorate the supply chain, right? The Houthi rebels in the Red Sea, cargo ships having to go all the way around the other side of the world in order to avoid it. There's a lot of issues with logistics and things like that. So it would just help a lot more if everything was created by the same company, right? You could use these same distribution centers and production facilities and all that good stuff. So consolidation is happening across the board, especially in arenas that are looking to really, really shore up for this next leg that we're taking. And I feel like too, especially even when it comes to candy, right? The role that AI plays and um, even when it comes to ad creation and formulating new candies and things like that, I feel like it'll be smarter for you to go join a big company rather than you kind of remain on your own and navigating all those challenges, especially the logistics ones, by your lonesome. So I don't have any insight into exactly why they're going through and executing on this. And in terms of going to make a trade on this, the move has already happened. So unless you spotted some volume beforehand and the chart looked good and you made some moves based on that. I'm not chasing after Kellanova, right? That is not at the top of my list here this morning. Let's see here. Our next story. Consumer restaurant jolt and other consumer news. Starbucks sent shockwaves across the sector after it replaced its CEO Laxman Narasimhan with Chipotle Mexican Grill's Brian Niccol. I talked about this yesterday, right? Starbucks cashed us out majorly yesterday morning on our leaps and long swings and swings. Um, Starbucks CFO Rachel Ruggeri will serve as interim CEO until September 9, when Nickel will officially take over. Wall Street analyst and activist Elliott Investment cheered the news, which sent Starbucks surging 24.5% on Tuesday, while activist investor Trian Fund Management cashed out of its Starbucks holdings. I don't blame you, right? It pushed up right to a major profit taking level. Everyone here, we took profit yesterday, right? Make sure you were taking major profit. You want to leave the minority of runners here, right? So if you had five, you might have taken, two or three yesterday. And if you leave one, right? Take the majority of them and let one ride. If you had 10, right, then you could leave, maybe two, but overall, you want to take the majority of your profit here and not look back, even though there is, still continued upside for Starbucks possible. It's just the time frame, right? After a huge move like that, we could chill out for a little bit and then continue. Former Starbucks CEO Howard Schultz also reportedly said Nichols' appointment was a home run. It definitely was. Chipotle has been crushing it. Chipotle is the best like fast food chain, if you can call it that, in terms of like stock performance and whatnot. Like Chipotle just they do everything right. Um, and their stock reflects it. So I think that's a great move because Chipotle's done it right. They've mastered a lot of different things, and Starbucks could stand to learn, right? And I don't think, like I said before, hint hint, I don't think Starbucks is done with the news. We'll see more news drop with them as they bounce off that major support level. Now, central banking easing in sight. New Zealand central bank is the latest to reduce its benchmark interest rate, surprising markets with the first cut since March 2020 in a year before its own forecast. The Reserve Bank of New Zealand lowered its official cash rate by 25 basis points to 5.25%, flagging more cuts ahead as the economy contracts faster than expected. The decision follows rate cuts by the EU, UK, and Canada, all moving before the Fed. With wholesale inflation coming in cooler than expected, investors now eagerly await the CPI report due at 8:30 a.m. Eastern Standard Time. Markets are certain that the Fed will lower rates in September, but are divided on the size of the cut. So CPI data, right, dropped here this morning. Um, let's see here exactly what we got. We got PPI that dropped yesterday, right? And PPI was better than expected. So, one might be led to believe that CPI could also be better than expected, but we'll see if they diverge. US CPI month over month for July, actual 0.2% versus negative 0.1%. Previous estimated was 0.2%. So, month over month, inflation was exactly in line with what was estimated. Uh, US CPI July month over month actual, same thing, exactly in line. Year over year, there was a slight beat, right? Positive. Year over year, it was 2.9% increase. The estimation was 3.0%. So in line with month over month, and then a small beat on year over year. There we go. Yeah, so it just suggests that inflation data is broadly in line with market predictions. Traders trim Fed rate cut bets after US CPI data. So it looks like there were higher bets that we would end up getting a cut before this data. And it looks like those bets have decreased as we've gotten the data. So, here again, we see that just because PPI might beat does not mean that CPI might beat. Just because we have CPI data doesn't mean that the market necessarily, jolts one way or the other as a result of that data. Thus far, that came out at what 8:30, and we initially like did some what popping and then dropping. Looks like we popped for 2 minutes, dropped for like 10 minutes, came back up, and now we're slightly above where we were when the news came out, right? So we'll see, what the market gives us here in terms of the reaction to CPI, and if we do get any major reaction at all. Let's see we got going on here for the rest of this newsletter. It's important also too to kind of recognize that like just because cuts happen doesn't necessarily mean that the market shoots up after that, right? I feel like it's natural to think, oh, markets can go crazy, and markets do in the long run, enjoy them and they end up going up. But in the immediate aftermath of rate cuts, markets, typically do sell actually. And a lot of it is because people don't want to go and spend money on things. They rather put it in the market, right? But when it becomes cheaper for you to go spend money on things, people pull money out. They start buying things, houses and cars and all that stuff. So, that's just kind of a mindset thing that's important to keep in mind as we approach September, right? When this rate cut should allegedly be happening. And it's very important for you to make sure that you know how to read the charts, right? That you're not just kind of making conclusions or jumping to conclusions based off of your experiences and what you think will work, and instead understanding what the charts say are most probable, right? And then executing off of that, which will win more often for you than it will come up short. Global news stepping down just a week after market turbulence rocked Japan. Prime Minister Fumio Kishida announced that he would resign next month amid waning popularity in the wake of political scandals. I mean, we've just got literally just elections, crazy elections, politicians stepping down. Like there's a lot that's happening in 2024, especially in Japan, right? Because Japan was where we had that craziness happen over the weekend, and um, It was widespread mayhem and planet-wide panic. Quote, politics cannot function without public trust, he declared. I made this heavy decision thinking of the public with the strong will to push political reform forward. Public support for Kishida has weakened in recent years after revelations of the ruling liberal democratic ties to the Unification Church and undisclosed donations from fundraising events, as well as rising living costs, paced wage growth. So it looks like overall, people ain't really, supporting your boy anymore. So he stepped down, and I'm sure he'll go, live in some nice green pasture and enjoy life from there. Did my mouse? Oh, okay. Might need to replace these batteries. In terms of today's markets, in Asia, Japan up 0.6%. Guess they're loving it. Hong Kong down 0.4%. China down 0.6. India up 0.2. The footy in London up 0.4. Paris up 0.4. Frankfurt up 0.5. Why even report that as green? This is before the data dropped. We're greener than this now, but they said the Dow up 0.02%. That's flat, my good man. By the time you hit enter on that newsletter, this was flat. S&P up 0.04%. That's a stretch. That is a big stretch, and you know it. I've never seen you go to that level of decimal when reporting this. Just say flat. Crude down 0.3%, gold up 0.2, Bitcoin up 4.5%, back above 60K. Consumer price index we got at 8:30 a.m. That's the biggest thing, today and this week. So we'll have to wait and see how markets react to the CPI data, right? We'll need to see once we open up what we're moving like. What else is happening? Report DOJ considers push to break up Google. We'll see. Home Depot, ticker HD, lower rates could breathe life into DIYs. Yeah, people, decide they want to put on that deck or build that deck once rates drop. Activist Elliott seeks 10 board seats at Southwest, cashing out Intel sells stake in ARM Holdings. Tilray, ticker TLRY, to buy 4 breweries from Molson Coors, trying to brew up that cannabis infused beer. I think that's interesting that Intel cashed out of ARM. Do they need the money? Do they not like ARM? I don't know. BHP workers go on strike at world's biggest copper mine. Google reveals on-device AI in all new Pixel 9 phones. I saw that they had a little snafu going on with the demo, which is so unfortunate. That's just classic technology, though. As soon as you need it, like RIP to that guy who was doing the demo. He's just up there trying to be nice and enthusiastic, and it was awkward. Maybe I'll post it, but he had to keep trying to make the demo work on that phone, and then he ended up having to switch phones because the phone he was working on, the AI demo, just did not work. But hey, continue to push, right? We all know how that goes. It won't be the end for him. It's not the end for Google, but it was just it's unfortunate. Paramount, ticker Para, starts layoffs. TV studio shuts after 11 years. Layoffs will continue, right? Layoffs will continue. That's not something that we can stop. But what we can make sure of is that we can provide value in the economic arena, regardless of what job we have or whether we're working for one company or another, or they decide to lay us off. Right? Make sure your money is working for you in markets. Make sure you know how to leverage AI. If you do those two things, you can survive in 2024. Hands down. Boeing, ticker BA, finds new 737 problems, further slowing deliveries, and the United Auto Workers fires off a lawsuit against Trump and Musk. So that'll wrap us up. Put a bow on it and take us out here for today, August 14th, 2024, on this fine hump day. Let's see what we end up getting from markets, right? From SPY. If we get any big moves, right? As always, we're working off our pre-market high, marking off our pre-market low, looking to see if we can get a little peak above and fail or peak below and fail, and then make some moves from there, as well as check out what the rest of these tickers are doing. Our Apple long swings are doing well and paying. We bought those on the dip, and those are coming through very nicely for us. Some Nvidia as well. So, go out, do your thing, scan the charts. If you don't know how to do that and you want to make sure that you're out here, operating with us, operating intelligibly in markets, come through. Email me, adam@adamhollandeducates.com, subject line trade. Let's get to work. Let's get active. We got what? How many years? Not years, months left in the year? 4, 3.5. Let's do it. Make it the best 3.5 months of your life. Let's make it a great day. Other than that, I'll see you guys back here tomorrow morning for our next pre-market prep session. Have a good one.